don't have we'd like to have kind of a rolling discussion around that. I'd like to go through each of the panelists here, beginning with the subject around that as you go from the in-person, people come into branches, or you meet them where they are, to a more online environment. That has the opportunity, or the danger really, to break the branding bonds, right? You don't, it's very culturally, I want to go in to the branch, I want to have tea with the branch manager or with my account manager. And that is once you move to a digital engagement, that really has the opportunity to break that kind of a bond. So how do you see, and we'll just go through each of you, how do you see the opportunity to be able to, what are the best ways that you've found to be able to have continue to build customers' relationships and stickiness and retention as you move more and more towards digital engagement? Kevin?
Maybe I can start here. Thank you for that question. I think the key here is really when you move into a digital space is to see how you can still ensure the customer experience is still good. When you were talking about branches before, and you mentioned it, people walking into branch, getting access to manager, getting access to banking staff, it's a different human touch, right? When you're getting into the digital space, I think one of the most important things is how can you still value that customer by bringing more attention with all the digital tools that you can put around. Maybe one of the experiences that I can share, I don't know those who travel with Emirates, when you are trying to very late at night to get in touch with Emirates just to try to understand how you can sort out your tickets or how you can get an upgrade with your miles, you've got a personalized chatbot which can help you today to be able to do your changes online. And I think this is fantastic. This is fantastic, and from a user's experience perspective, it gives another dimension.
Thank you very much, and good morning, everyone. I want to begin by saying that financial services generally is in transition. Transitioning from the traditional era where you only use banking outlets or person to person to transact in business. And that generation of customers are on their way out. If you look at Nigeria, for instance, majority of Nigerians the new generation digital natives, and so all over Africa. And looking at statistics of the census figures, only 9% of Nigerians are over 54 years. Only 9%. So that means 91% are those that actually and the active years that the new council services are even people of my generation that are older, I cannot remember when last I visited, a bank branch. I cannot remember when last I wrote a check. I do my transaction, and then imagine from younger generation. And that is why you see transaction more going to younger people using some of the new organizations in Fintech that deliver services. I think it's something that will go away. But while it's still here, banks and Fintech must be able to know what the customer preferences are. The branch is going to go into extinction very, very soon and come to something else. You talk about chat banking, and I know that a lot of banks now use WhatsApp banking, where you can at least, you don't see the face, but at least you can ask your questions and get your responses and so on. A lot of banks, a lot of them now also use video banking, where you can have, similar to what happens like Zoom and social media, you can still see. You can see the person you're talking to, you can still get served, so on and so forth. So, and if you see the trend in the last few years, we have seen a lot of people adopting digital publication. We cannot still take away the human interface, but sometimes, maybe a few times you see me to have that personal going to the future with new people coming to the world of banking, world of fintech, as customers, banks, there's alpha that coming into the workplace. You see a lot of, and that's why it's happening. We now have a lot of data where banks and fintech companies can actually, ventilate ideas from clients to know exactly what it is that you can do. And then, so pension plans, innovators, making identifying new product and services that can address the needs of customers, which will take away the need for personal identity. Thank you very much.
Thank you. Joshua?
Okay, thank you, Ron. So, the question is this: do customers still need to take tea in the bank branches? It's all about relationship and value. Before now, relationship starts first, then brings value. But right now, customers, what they want to have is value. The truth is, an average financial services user today might not really care so much about who does what, but about what is done. My needs, are they met? Not who is meeting my needs. Why you see right now today, people they may not even know the people or the organization behind some of these services that they are consuming. And except we tell them, oh, this service is, the parent company is this. They don't know. All they want to know is that I need this service, I'm getting this service at this time, with speed, with accuracy, and it's meeting my needs. So, financial service providers today need to understand that it's yeah. Okay. Yeah. I think it's an example. I need to talk, so it's not compulsory. I use the microphone. Yeah. Okay. So providers need to understand that they need to give value, and again, we are in Lagos. I don't know if you are wrong. I don't know if you can speak some level of Nigerian English. It's called a pidgin English. Okay, so only fact can speak pidgin English. Now, in Nigeria today, there's no time to check time. Okay, I need something and I must get it the way I need, whether it's branch or whatever. There's no time to check time. It's value and value that is it. Thank you.
Thank you very much. Staff?
I think it's important for, at least for us at Branch, the one thing that we're very conscious of is making sure the organization's values trickle down all the way to our customer service and how we handle our customers. And customer service is really at the bedrock of what we do, to the point where the metrics of success that we monitor, that I have in operations meetings every week with how well the business is doing, our customer service metrics are right up there. And we monitor these very, very closely. Now, because we're a fintech, from the foundation of the business, the customer contact has always been virtual. So it then becomes, how do you make sure your values as an organization translate when the only contact you have is virtual? And I think that's the most important thing for organizations to continue doing, because even with walking into a branch, it can actually be a very distressing experience, right? Walking into a branch, standing in long queues, the staff in the branch may be dismissive or rude or whatever it is. So it's a fairly traumatic experience to actually walk in and try to conduct business. So with that being the case, it can be doubly so if your only contact with the organization is virtual. So we're very big on training, very big on monitoring, mystery shopping. Anybody internal, external to do with us that has contact with our customers, we monitor extremely closely. And some people who don't seem to get it, but it's extremely important. Just the values of our organization must trickle down to the contact with your users or your customers, regardless of what the medium of contact is.
So I think that brings up a good point, which is almost all of you are involved in essentially ecosystems. And I think the financial industry is in the middle of a transition from, I only provide my services individually, and then, other people move more and more to the mobile engagement, to ecosystems, providing financial services through others, particularly in microfinance, where you're on another platform, and you have these partnerships. I think there's a lot of challenges with from a customer relationship. How do I manage things in such a way that that I have visibility into the relationship that the partner is having with my customer, because they came through my platform, because they can destroy your a bad experience can destroy your brand, right? So let's start with you on.
Yeah, so I'll give you a good example. So we outsource our after for a certain period of time, right? So we use collections agencies. How we typically, the few times that it's happened, we've caught agencies, but they're incentivized to be abusive because, unfortunately it works. So this kind of practice, even if that you have to, as to the value that you bring to a user, the claims that you're able to make out in public and being able to stand behind those claims, and sometimes take a short-term financial hit.
Yeah, I think that's.
Okay, thank you. For microfinance banks,
Can we get a replacement mic for this one?
okay, so for microfinance banks, we enjoy partnership within the ecosystem, because we cannot provide every service, every infrastructure that we need. So we encourage our members to have partnerships, collaboration within the ecosystem. But the partnerships and the collaborations are to the level that the customer must be at the core of these partnerships. So once you know what customers need, and once you have deciphered the customers' needs, you know what the customers want, and then we know the services we want for the customer and the product, then we align the partnerships and the collaborations along those areas. And what we have also encouraged our members to do is also to put at the center is responsible banking. Partnership or collaboration that will not enhance such things like responsible banking that will not improve the customer, we at no time, encourage such. Yes, we know that at times there can be issues around, a microfinance bank, probably, service providers. We could have technology service providers, we could have those that do the credit bureaus, we could have, a whole lot. But we, over time, we evaluate these relationships to ensure that the essence or the need or the purpose for which we are entering these partnerships are met, and we review them, we evaluate them, and we improve on these partnerships. Thank you.
As we move on to create value for our customers using digital platforms, the value of partnership, collaboration, alliances increases, because no one organization can provide everything that it needs. And before I speak to the operational level of partnerships and collaboration, we also need to look at the higher level of collaboration and partnership at ecosystem level. And that is why at Africa Fintech Network, we bring in all tech associations in all the various countries together to work together to provide, to help also with the advocacy and things like that. And through networks, through the African Fintech Network, we have represented about 40 countries. We're able to understand a lot better of the products that are available, new things that are happening, and how we can use them in the various organizations. Ditto for what happened at the national level. I know the Fintech Association of Nigeria is divided out from 33 different sectors, banking, insurance, able to pick and choose partners that can help you in the operational level of how you manage partnerships. Every organization must have a template to determine the partnership mode, what kind of things that you are looking for in the partner, and that support whatever it is that you are doing. And no system is perfect. Very well. And there, anything can go wrong at any time. For a plan, a strategy that can trigger, a new way of serving your customers if one of your partners is disappointed, which must happen anyway. And you cannot guarantee 100% functionality of the system at all times. So it's very, important that you have a plan that ensures uninterrupted service. Because what the customers want, like I said, you want to get the service now. And so you want people to make sure that now service is available at
because today I'm a service provider, and I need to understand that you are getting into a relationship which is not going to be a client-provider relationship, but which is going to be really a collaboration through partnership. As what is really the customer needs? If we know the customer needs, how we are going to innovate and how we are going to communicate, so that at the end of the day, like you rightly mentioned, the value has to be here. And the value is not only in a relationship between financial and financial institution with a technology partner, but it's also what are we going to bring as value to the end customer, so that that customer
In a traditional environment where we had branches, things like okay. Welcome. So, as I was saying, a lot of branches that have, or banks that have physical branches are reorienting their branches around these services, education, and that sort of thing. In a virtual environment, that, I think one of the key things about trying to improve the financial inclusion, which I think all of us are focused on, is how do you also increase the customer financial literacy, and how do you get people to be able to improve their understanding of things like getting loans. I think one of the presentations this morning, there was a footnote that around how microloans may actually be causing more problems, right? It makes it much easier to buy, but then the follow-on impacts have issues. So, so one of the key things is, how are we going to, through these virtual channels, help to improve the education? And so I'd like each of you to say, give some examples of where you've seen that are kind of best practices, even if it's not your own, that are focused around actually helping to improve the financial literacy of the customers that you deal with. We'll start with Kevin.
I can start, and I can maybe give an example of my country, for example. It's a fully bank population in Mauritius. So we have approximately 90% of the population banked. Bearing in mind that it's a small country, 1.2 million people. But what we've seen recently, post-COVID, the major banks are gradually shutting down their branches. It's not like they are removing all the branches, but they are doing it gradually. And if I can put it like in a transitional way, where some of the population are not going to suffer. So what do I mean by some of the population? If you take the population of Mauritius, it's quite an aging population. And you cannot expect that aging population overnight to be able to get into the digital channels and to understand clearly how it works and become digital literacy, right? So what I've seen is that in each branches, you tend to have ATMs where you go and withdraw your money, and then you have the branches where you can walk in if ever you're having an issue. But what we're seeing now, more and more, is that the branches of the ATM, but then you have a small point of sale just to make sure that when the aging population is coming, you can educate them. So it's a full process, it's a full transformation, it's going to take time, but this is one of the aspects that I've seen happening. There may be other aspects, definitely, but then I don't think it applies also in each and every country. In all the 54 countries that we have in Africa, I would think that it's totally different in each of them.
Yeah, I think that most of the challenges that our other panelists deal with is the younger populations, right? That don't have that experience, right? So how do you help young people who particularly are very focused around the instant gratification, right? One of the biggest challenges of the social media is that it really promotes the, if I want it now, right? And overdraft, microloans, that sort of thing can help that, but people need to learn about how to safely use that and become better consumers. So, Dr. Sagoon, you can give us some thoughts on that.
I'm happy about raising issues around digital financial literacy, which for a long time, service providers have focused only on the supply side of the equation, providing financial literacy only to its staff and so on and so forth, neglecting the large number of people who are going to be their customers to understand exactly how to navigate these digital platforms and how to make the best use of the products that are coming to our team. we have largely not performed well in terms of educating, the customers and potential customers that have increased the number of our business. And let me give some practical examples of some of the things that we have seen happen in recent times. I mean, not about a few weeks ago, I was the chairman of the Global Banking Education Standard Board, which is the board responsible for determining the standard of education for bankers all over the world. And we come up with banking standards from time to time. One of the standards we came up with 2 years ago was digital financial literacy for bankers towards serving their customers. That line a lot of names of customers and how this can go about. And I know that regulators and banks have been, directed to pursue this and follow this so that can resolve this problem. Also, at the operational level, we have seen a lot of banks, organizing webinars from time to time, to educate their customers, on this. And I think so needs to be encouraged. Whatever you have in new products in the marketplace, you need to let your customer or the public know how this is done. To find out one of those ways, the social media that you have, alluded to. A large number of your customers, a large number of their customers are very, very active on social media. You can use this to attract their attention and provide information and education as to how to access some of the services that we are bringing on. Now, when any new thing comes up, because the digital world is very dynamic, things do change from time to time. Apart from even the services change from time to time, new regulations, come up, and then also issue of customer protection, consumer protection, and you also educate your customer on how they can protect themselves from issues of, fraud, privacy, issues, and so on and so forth. So we have the platform through the various social media that exist today, and those that will come up, from time to time, where we can educate our customers, particularly those of them that are very, very active on social media.
Josh?
Okay, thank you. So for us at the Association of Microfinance Banks, our members are microfinance banks, and if there's anything we do, we know as a microfinance bank, it's not just about profitability. Anybody that's worked in microfinance bank, we know that the first statement you will hear a microfinance bank practitioner say is what we call then it was the bottom line, but now it's the free bottom line. So we strive to ensure that our customers or our users are improved profitably on their businesses and socially. So in terms of social improvement, taking them up the social ladder, this is where financial literacy comes to bear. Now, for an average microfinance bank customer, if you say, okay, I'm giving you a loan of, say, 200,000, and the interest rate is, say, 2% per month, an average microfinance bank customer then will not understand. So our staff have been taught to further explain. For everybody in this room, you can offhand calculate 2%. You can even do the equation analysis and get on them, and you can say, hey, you are paying this amount per annum. And often microfinance bank customer will say, I don't understand what 2% is. How much is it in Naira terms? They want to know. I'm collecting 200,000, how much am I paying as interest? And what else am I paying? So they add this up, put it on their products, or what they want to say, hey, no, I won't take this loan, or I will take that loan. So we have been doing that, it's part of what we do. So but right now, taking this into the digital space, because for us, we believe that digitalization is taking your services, take this, it's a channel. Just take what you're doing, put on the digital space. So right now at the association level, and I'm encouraging all the microfinance and say, improve on what you're doing, improve on your financial literacy. Can we have, that's why we say collaboration and partnerships. we collaborate with service providers who can help us make some of these explanations, some of these financial literacy explanations, even on the digital space. So it's what we do on an ongoing basis. Thank you.
Mr. Ira, the measurement of success is none of your customers go to collection.
Yeah, I think we would all fail. But no, it's there are two things I think that it's important to educate our users about. On the lending side, exactly as you mentioned, it's not only communicating, well, this is the APY or loan that you're getting or anything like that. It's succinctly ensuring that each user knows if I'm taking out a 200,000 naira loan, these are my equal monthly installments. This is how much I'm going to have paid back. Now, since you're delivering these services via an app, the user, before getting the loan, has to see this, read it, and agree. And it's not, it's not sort of like the Apple terms and conditions that are like 10,000 pages long and nobody ever reads them. You have to make sure that this is being communicated to the user in a way they can visually and quickly understand and agree to. The other thing that is really pressing to educate our users about is data protection, data security of your finances, right? Because globally, we are in a time where, scammers are working harder than we are, right? So there's only so much work that we can do. And the users themselves also have to do the same amount of work. So we actually spend a lot of energy communicating with our users through all channels, whether it's social media, whether it's SMS messages, whether it's in-app messages, basically educating users about how to protect their finances and protect themselves. And that's the one thing that we take extremely seriously, because there's very little we can do about users that give up their information and therefore lose money to that, right? So the onus is on us to make sure users continue to be educated, and it's something that we do day in, day out, week in, week out.
Sam?
Yeah, thanks. So two things here, right, like you mentioned. One is digital financial literacy, the other digital financial inclusion, and as well with respect to the success of customers, and as well data protection, just like she said. Now, what I would say with respect to literacy is I'll take our minds back, right, to the likes of Money Points, PiggyVest, amongst others. We need to look at the behaviors of Nigerians. We have over 200 million people in Nigeria. Truth is this: you cannot change the behavior of Nigerians without spending money. And by money, I mean millions of dollars. Honestly, that is the way Nigerians are wired. So when you talk about digital financial literacy, you need to think about money first, right? Because for instance, take a look at Money Points. Today they have like one of the Money Point OPay, they have like a very large distribution in the market today. They couldn't have achieved that without incentivizing all of those agents. So spending money is important for the type of people we have here in Nigeria. Now, secondly, with respect to digital financial inclusion, I think it is about time we stop talking about financial inclusion, right? Frankly, and this is what I say anyway. You can drop a cube of sugar here. When you drop a cube of sugar here without ants being here, you realize that ants will find their way to that sugar. Think about that, relate that to human beings. Even a local farmer, right, in the most remote part of Nigeria, understands Naira and Kobo, plus and minus. Forget about the fact that they are not educated at all. If they can feed people all over Nigeria, truth is, they know something that even the educated ones do not know. Do you understand? So what that means basically is, if you create, first is enough of the whole feature, we have built this, we have built that. This is what will help people get from A to B. Let's talk about benefits. We need to move from the point of features into benefits. Because if you relate those benefits to being sugar,
these people will walk up to you. That's my truth, right? Around that. And yes, and as well relating that to data protection, I think having scammers are finding like their ways every single day. As much as yes, we don't want that, we want to secure the information, the funds of our customers, the people, amongst others, right? The truth is, scammers are the greatest pen testers we have. Far from the payments we make in hundreds of thousands of dollars every year to protect our system, right? Without these scammers, we will not know the loopholes. Do you understand? So there's an advantage and a disadvantage that comes with that. So, but yes, above every other thing, it is our job to protect our customers' information and as well their funds. Thank you.
Thank you very much. I think now is a good time to see whether or not the audience has questions for our panelists. Any of the subjects that we've been covering around, how do you continue to hold a good relationship with your customers as things become more focused around digital engagement?
Rob, we have a question up over here.
Good morning, still morning. I have a question for Daniel. My name is Ekena Jane. You mentioned that one thing that Branch International does is that you don't condone abusing customers. So has that in any way made, shifted the ball for you? Has it made it better? Do you have more customers based on that? I don't know if you understand. Compared to other companies.
Right. It's fundamental in our brand promise. And I think every time we go out and speak to our users or hold customer feedback sessions and stuff like that, it's something that ranks in the top 3 reasons why they're branch users or why they were attracted to branch in the first place. So yes, I think it's fundamental to the way we do business globally, fundamental to, again, like I said, our brand promise, and we've gotten feedback from our users that it ranks really high on why they use us. So I think the answer to your question is yes.
There's a question.
Okay, my question is for Sam. I like Samuel, sorry. I like the conversation around enlightenment and the fact that if you do digital enlightenment, you have to spend money. And I think that scares a lot of people away from doing digital enlightenment. Now, I don't know how going forward we can improve customer enlightenment digitally, because we can continue conversation around customers, but I think that the truth is, instead of being customer centric, we just push what we think the customers want, simply because we want to avoid the expenses that come with getting customers feedback, getting all of the things that the customer wants. So how do we move forward, spending money and getting value from the customers, rather than keep running away and pushing what we think the customer really needs?
So first is, I think it works in both ways, right? As much as companies today spend money, right? I think they also capture value, right? So think about it this way, even at our past, and I like to think I'm speaking for like a lot of other fintechs, for instance. We all spend money, right? But value also comes because you can't spend without building a good product. And by building a good product, you only build a good product based off on customer feedback, right? But I don't know, it's so sad. I wish we can actually see that, like, from the point where you're sitting right now. The truth is, those who came before us, and I think even for like the Lightning branch, they spent like a lot of money before the likes of our past and others came. So they already changed the behaviors of customers, the behaviors of Nigerians, right? So if we say we should go the other route, maybe without spending a lot, what you realize is that they will just own the 100% of the entire market share, and we'll just sit wallowing and looking that we're doing God's work. But God's work is literally what everyone does.
Good morning, everybody. My question is actually, my name is Michael Ozoma. My question is actually to Joshua. We're talking about financial inclusion. We're talking about how to extend our businesses to, unfinancial people in the remote areas. And business, we know, is all about, you have to take risks. Then we're looking at, trying to meet your customers' need. And we know we have customers today who wants to take your 200,000 and take off to Ghana. And these funds, you need to replenish these funds. How do you mitigate this risk, to ensure that your shareholders' funds are being protected? I know it's very difficult, but because if you want to do business, you must also look at how to mitigate risk. How do you, close this gap? Thank you.
Okay, thank you. For us at the sort of microfinance banks and member banks, it's funny that an average, let me say, below middle class person and a business person, once the person needs a loan, the first picture that comes to the person's head is approach the microfinance bank or approach the digital banks now, like some branch and banks. But once, say, they do this good business and the God's work happens and they are paid very well, they tend to go the other way. One of the big is 17, now 25. So we at the microfinance banks, our major activities lending. So our staff are well trained to be able to analyze the borrower. When analyze the borrower, the customer is coming to borrow. So you have to analyze the borrower and the various, we know that the various things you have to analyze the borrower. And because most of our lending, they are done using the not conventional means. By that I mean we don't have the luxury of concrete collateralization. We use social collateral, soft collaterals, such things like that happen. But there are various things that we can put in place to mitigate some of these things, and that has to do with what type of guarantees do you have, what are the things that you can bring in. For example, if you are lending into the agri sector, now do you have requisites, say insurance policies to take you out when something like that? So it's something that I can't exhaust that here. It's microfinance banks are well trained to ensure that we mitigate some of those things. Yes, we don't have 100% collection rates, but we strive to ensure that at least we meet the maximum NPL as required by regulators. Thank you.
Okay, well, thank you very much. I think we've come.
Okay.
You have one more question? Okay.
Good morning. My name is Yusuf. So this question is related to Samuel. For most fintech companies, I know for a fact that the CEOs and also the families. So what are the social plans for them? The CEO, what are the plans for most fintech companies so that the customer function is guided?
It seems he has some millions of dollars in one. All right, so I think one thing to note, right, and as well, if possible, get to clarify here today is is this. It doesn't matter if it's a fintech, a commercial bank, or any other organization, right? There are certain things that are common amongst anything called a company or an organization. And what that thing is governance, right? Provided there is governance, there will definitely be a successor or a continuity plan, right? So regardless of whether or not the founder or the founder is the CEO, right? Fact is, there's already structure. That company already has like structure. The fintech already has structure. Whether whatnot here, there's always someone to plan, which is why I think one that is becoming a big conversation right now, amongst fintechs is to have that next person who can lead in the absence of the founder. And from time to time, I think fintech CEOs, founders need to like maybe go on leave for like 2 months, 1 month. Though it's a difficult thing. I've never gone on leave before, right? Yeah, but it's a difficult thing, right? I think they need to go on leave just so they can see how.
Enforce succession planning and corporate governance.
In terms of the default rate, using digital and so on and so forth, and to say that it's very fundamental to understand that the basics and principles of banking have not changed. Have not changed. But but also put in place, appropriate procedure that will ensure that you minimize the risk that whether international, the risk has already been there. And that's one thing that can be in a bank when you have high delinquency. So it's very important for all of us, service providers, fintech, bank. We should see beyond meeting the minimum KYC requirement of regulators, but keeping them into who you are lending money to, so that you know that person bring back. Of course, no matter, it's your kind of intention. At least you can reduce the levels of that will not create existential threat to your family.
Thank you very much. So I'd like to thank, please join me in thanking the panelists. I think it's been a very good discussion.
Thank you. Thank you, Rob. Thank you, panel. So, while I will introduce the next speaker, may I request the team over here to remove the sofas as well as the table. All right, and may I ask the gentlemen from the hotel to take the microphones and the clock. Because we are about to begin the next keynote presentation, which is about evolving your digital engagement journey. Now, the speaker, she's coming all the way from Dubai, this is Isabel Morris, Vice President of Channel Sales and Partnerships at CR2. CR2, they are probably our simple partner at this event, and it is a privilege to have you with us on stage. Well, you'll be joining us on stage shortly. So let's just have clear off the stage before, let's just have it clear. I can see my CEOs are having a good time with their networking. All right, we have to begin the next session, so if I may request everyone to clear the stage. Meanwhile, I'll demonstrate, Mr. Tesla, I'll demonstrate the usage of the clicker. So that's how you change the slide. Oh, that's fine. That's simple. And there's the stage. It's all yours. Please show your appreciation. Please show your appreciation to everyone. She's coming all the way from Dubai.
Hello, everybody. I think you told Mohammed's behind today. I hope you're ready for this section. Thank you firstly to the organizers, Mohammed, Mallory, everybody involved to be for having us here today. Thank you, Nigeria. I'm so passionate about Nigerian payments, I even wear your national flag today. I was asking my colleague, how do I say in your local language? Like, well, there is no one word. You have Koyo, you have Assalamu alaikum, and I was like, okay, I'll stop here. But this is how our customers are. No different. So let's see if this clicker works. Me, very briefly, not very exciting. I am based in Dubai, I'm head of partnerships, CR2, banking and payments platform. My background is payments. I used to do 3D Secure. I'm head of the region here for Middle East and Africa for MasterCard. Before that, I was in charge of payments at MasterCard as well. So I was brought up in an environment where card was everything at that time. So enough about me. We're not here to talk about me. We're here to talk about our customers in how the expectations have changed, continue to change, and this is not a revolution. This is an evolution. So what do I mean by that? Well, I can be here for a lot of time, and I think Mohammed will get upset. But when I was in university, I wasn't paying too much attention to studying. I kind of was practicing a lot and learned to remember things by the three. And in our context, we have the 3 T's here. So, when I was in London, we used to get delivered the phone book. It was huge, yellow book. This is how we found contacts at that time, in the traditional mode. Then we moved to transitional, or what we did then, to that phone book and put it online. It wasn't huge, but it was transitional. What is transformational is things like metadata. So Google takes metadata and tells me what I'm about to search before I'm actually searching for, because it knows people like me what they actually search for, so that the right data at the right customer is available anywhere at any time. So hold that thought. What happened in travel? Similar. We moved from traditional, oh, my mom used to go, I want to go on a holiday, this is my budget, where can I go? And just to spend hours at the travel agent. Then we moved to transitional. So it kind of was a bit of a shame because we cut customer touch points. So we moved to online, we moved to booking.com and Expedia and all that. What transformational was what Airbnb did. And Airbnb are not tech guys, they're designers. Because what was the customer need? Customer need is not a hotel. The customer need is a quality accommodation that makes them feel at home. So you see where I'm going in this? It's not about the product. It's about what the customer need is. And Airbnb has become huge. 70% of their business is direct. It's kind of the thing you do. I'm going to Airbnb it in Lagos. They don't say I'm gonna Expedia it or Booking.com it. Okay. Similar. Uber. Okay, I come from London originally, so I'm used to the rain and calling for taxi was a nightmare. Nobody will ever stop. Then we got the predictive taxi riding apps, Ubers, Caribbean, many of those. Again, transitional. But what the customer needs? The customer doesn't need a taxi. The customer needs transportation. This is where transformation was. We're ride sharing. We're going in the same direction. Why can't we share the rides? What about banking? Obviously, I'm then what we did in the case, well, we kind of moved sales, we moved marketing, put them online to increase customer touch points. Yeah, things are not quite clicking together, right? We all know that. So what is transformational? In banking, I don't like the word digitization. That digitization doesn't work by taking a physical channel, making it online, and think this is how you're going to achieve your customer expectation. So, what do we do? What do we do next? And my clicker doesn't want to work. There you go. So a lot of you have been listening to these fantastic discussions this morning, and everybody put on the table saying, okay, but what do we do? We know, but give me some tools. So some of you may say, okay, probably one of the tools we need is technology. Yeah, okay, we have the technology. The technology is available now, right? So why before COVID, before 2020, $1.7 billion was spent by banks buying new tech, and 84%, according to Accenture, failed. So it's not a technology problem. Okay, so then maybe people don't know how to manage it. No. When you buy new tech, you get to learn, you hire the right people to help you manage that tech internally. So what is this magic ingredient that is missing, do we feel? It's the mindset. And what do I mean by the mindset? Is, do we have the right mindset as customers to achieve their purpose? So I ask you for the next 10 minutes, don't think like CEOs, don't think like CIOs, CFOs, VPs of sales and marketing, CTOs. Think as a banking customer. So, what is that purpose? Okay, well, I was thinking of ways, how can I best present this? And I thought I'm going to present my friend Aisha. And I'm sure many have friends just like Aisha. So this is my friend Aisha. Who is she? She's a mom. She's a working mom, just like me. Now I'm presenting to you here today as a CR2 person, but if my phone rings, I'll be a mom. Right, this is what we women do, and can do. Who else is Aisha? She's multifaceted. We don't just one type of customer. She has her own business. She, from her dad, she was on the corporate ladder, and they said, I had enough of this, I want to do my own thing. So she has a platform, online platform, e-commerce platform, where merchants can sell things. Very similar to Amazon. Okay, so she's very passionate about growing her business. She also cares about the future. So, by save, she has to retire. So she's also planning, searching tips on how to save money. So let's take a deeper look at meet Aisha and what her financial banking needs are as a mom. Okay. So We talked about data. We talked about APIs and open banking, and this is happening. We first use APIs to connect internal systems. APIs now have to go external. But this is not enough. As a bank, I have very limited access to data. Because as banks, we traditionally focus on transaction and products. But I have very limited knowledge of what Aisha does aside that. Very important is contextual data. What do I mean by contextual data? Is going to the supermarket and instead of them giving you just a bill and say, okay, 30,000 naira, they actually tell me what did I spend the nairas on. And I get this information to then get a better view of who Aisha is. It's a bit like I had my first baby and my airline was sending me offers for a shopping trip to Rome when I was actually buying nappies. Because they didn't know me. Because we have to, when we talk about AIs, we need to talk about contextual data and bringing the outside information in. Okay, great. So what else does she do? Well, she wants advice. What we have done as banks and bankers is we digitized it. It's my hate word. But a lot of customers miss that touch with the banks. She used to get a call once a year, once a quarter from the bank and say, how is it going? This is not happening anymore. She wants to have a relationship with her bank. So they can tell her, okay, how can I save money for my kids' education? Based on my spending, what do you suggest I invest in? This is missing. She goes to work, she drives, she pays for the electric car, the petrol station by the wallet, she parks at work, automatically everything is done. So she's wondering, well, where's my bank here? Who is my bank? She wants to be able to bank and to access her details whenever she wants, wherever she wants. Not when we tell her to, as banks. This is extremely, extremely important. And she wants to have the human touch. She wants to be able to speak to her bank. Then, click it this long. Business, she's a businesswoman. Okay? So what this means, well, she's paying bills, there's a lot of accounts payable, accounts receivables, there's commercial banking. Actually, Gartner did a study and they said commercial banking to deal with fintechs equally as much as banks. So far, banks and commercial banking are doing better, but that's changing, and it's changing very fast. So Aisha can have an app for her business banking, SME banking. Then there is another app for her personal banking. There is another one for payroll. It just doesn't work. There's a lot of friction. Right. So.
We're having some difficulties. You're on slide 13.
Yeah.
Just put slide 13. Slide 13. Yes, put it there. Show slideshow.
Great. So she needs payment gateways. She needs to pay those merchants. She needs to pay the schemes. She needs to make sure she has enough money. How is she going to invest? How can she grow her business? How can she retire? Where is the bank here? The bank telling her, basis on this, you should invest in, NFTs, EFTs, whatever that might be, crypto. She again wonders, where is my bank? I wonder where's my clicker.
Yeah, there's some, well, I don't want to say it, but go to slide 14. Next slide.
That's smart, I can't remember which slide number this is, but.
They're on 13, not 13, but I guess we need to go slide 14.
Okay. Can we move it manually?
Did you click?
Yeah, I've been clicking for quite some time. It's worked out. And one thing that a lot of banks now are thinking about is investing for the future. ESG is important. Bank of America did a study last year among the high net worth individuals. And 75% of them said that sustainability matters. Now, this number used to be 25%. So things are changing. And people demand these products that are sustainable. Digital wallet, instant card issuance, no plastic. And these products demand high price. And she cares. Aisha cares about well-being, saving for the future, as well as changing the world and changing the planet. ESG should be part of every bank's agenda. Oh, okay. That's
Guys, could we please have this started?
That's fine, no problem. This is live, it's not pre-recorded, so we'll have to go ahead. So, summing up, Aisha, she's a mom, she's a worker, she cares about her business, she cares about the future, she cares about investing, she wants to retire. Okay, fantastic. So then, how do we cater for all these Aishas? Because you have millions of these Aishas in your banks. Inshallah will come.
Yeah, I'm sure. I'm sure.
Right. Great. There's no signal here.
If you could just take a look at that over there.
So we some of Aisha. So okay, so what moves do we need to make as bankers? Well, first is digital literacy. Now, do your teams think customer first? Are they building products? Or they because this is what Fintech's been doing very well. They have been building experiences, whilst banks been focusing on building products. Then, great. Technology. Yes. And I'm talking about what technology I'm going to buy. Like, there's just so much out there. Well, it's important to buy a technology that is agile and can support the change, because what you build today probably won't be relevant tomorrow, because the customer behavior is changing, right? This is how we all started. So when you choose your partners, when you build a technology, think, will this technology help me support my business in 5 years' time? Very important. Partnerships and ecosystems. Well, there's been a lot of discussions already this morning on that. I think we've established that fintechs are friends, and it's very important to partner with the right partners and co-create. See, I think the EcoBank CEO said, fintechs need the banks because banks have the regulations, they've got the licenses, and they have the customers, right? But what fintechs have is the customer experience. So combining the two, you can co-create. Now, another magic ingredient, as I call it, is data and insights. We already spoke about it. We know data is important. I'll give you an example. Apple launched card. Now, some of you might say, well, what's Apple going to do with this? They're not a bank. I say, no. Are they not? They move money. They have deposits. So Apple partnered with JP Morgan in the US for a credit card offering. And this credit card offering was aimed at people that have no banking history.
Yeah.
This is notoriously area banks don't explore. Banks are not interested in giving credit cards or money or extending microlending to anybody who they don't have history on. And you know what Bank did? They offer them these credit cards. Apple got unprecedented cater into the customer. I think the next thing is continuous improvement. You know, we don't all know it well. We make moves. We're not there yet. But as I said at the beginning, this is an evolution. It's not a revolution. And when I was thinking of movement to my audience, in a succinct way, I came up with a video, and I just hope this video works with this. Yeah, my husband are changing as well. So, to all of you who thought that he made a mistake, he got it wrong. You don't think he got it wrong?
He's a nice guy.
He is a nice guy, bless him, I know. Hands up.
He's the typical hubby.
Hands up. So if you think that this guy learned,
Yes,
good.
he learned.
So this is with your customers. This is your data. You have to be agile. You have to be able to scale and cater for that evolution rather than revolution. And we see progress. You know, we're not new to Africa. We've been in Africa for many years. You know, we have CIB in Egypt. We have Access Bank here in Nigeria and Unity Bank. We've got Dashin Bank, Zemin Bank in Ethiopia, Access in Zambia, Oxfam, South Africa, Sandbank in South Africa. We know Africa. Okay, we know progress being made. Some progress is made faster than others. I'll give you an example of what has worked really well in Ethiopia. And that's Dashin Bank with a wallet. They launched a digital wallet. But the only way for us to digitize foreign payments into the digital world is wallets. And reimbursements and government welfare into wallets, adoption will increase. So what I want to know, so the bank before process was like, okay, but listen, we don't have a platform. All of our customers have like 10 different apps. One is for USSD, then it's for business banking, then it's for their own mobile banking. How can we get this and bring them into one wallet? And the proxy are doing, we did that. We did a wallet. Ethiopia is very young in population, high, it's very fast growing economy. Right. So we offer the platform because this is not about channel anymore. Not just going channel. It's not, and then not comparing your banking app with your competitor set. They're comparing it with Apple, with Amazon. It's not like, oh yeah, I'm on Amazon here. Oh, after my banking app now. The best experience is the expectation for the next one. So we created an ecosystem to create over 8,000 merchants. The result has been phenomenal. You know, it's the first super app in Africa, in Ethiopia, sorry. The growth has been phenomenal, over 8,000, the same year on year. Huge amounts of users. People pay their satellite bills, they pay their telecoms bills, they pay their water, electricity, everything through that app. They can go and buy coffee. They don't need I don't need anything. They just need that app. So it's been fantastic success, and the reason this was because they built around the customer. So what product, as we say, back to like banking, your customer needs? How can you offer something that is different? Because seamless experience is not enough. It has to be what needs are you aiming to address. Start with one. You can't address all your customers at the same time unless you have huge budgets, huge teams and times. How can you make yourself different to make sure that the customer chooses you? And remember, tomorrow will be different. Thank you very much.
Really sorry we have to questions later, but I will have a chat with you offline because a lot of glitches took place. I really apologize for that, but I'll have a chat with you offline after the session. The next speaker is Mr. Ronald from Hawaii. So if I may ask my team to kindly put up his presentation so that Mr. Ronald can take the keynote forward. I have the presentation on. And Mr. Ronald will be presenting using intelligent automation to build business resilience. Over to you, sir.
So, can I have the same thing down here or no?
Yeah.
Okay, that's not it, but,
So,
okay, anyway. So, in a complete change of pace from what we've been talking about this morning, which is mostly high-level things about financial inclusion, about how do we create our brands, how do we get them to exist across the transitions as we go to more network-oriented things. This is a little bit deeper into the what are we going to do about how do we continue to offer the capabilities that people are looking for so that they will continue to utilize these new kinds of services. So I think the first thing is that users are growing to expect, and I think we just saw that in the previous presentation, is people just want finance to be part of their life. They don't want to have to think about lots of different kinds of applications. They don't want to think about the banking experience. They just want it to all be available when they want it and wherever they happen to be. And what that means is that banks need to move to being digital. And I think that we've talked about that. It's really a matter of being able to meet the customers where they are and be able to do things like deliver location-based services, be able to meet them on their social environments and that sort of thing. So that the transformation then needs to be to move to being a smart bank. And to do that, you need to have visualization. And I know the previous speaker hates that term. I'm not real happy about it either, but it really encapsulates the movement of the physical or the traditional kinds of environments to being all about being digital. And one of the key things about that is that operations have to be restructured. So historically, the banks have been very focused around things like cash management, about the middle office, the back office, that sort of thing. But what needs to happen in the future is essentially and much more around user experience, the performance of the application, the ability of the user to get timely access to it. And one of the major changes that is happening is that as the banks and fintechs collect more and more information, there's more and more opportunity to create value from that. And so the ability to collect the data, to be able to analyze it, to be able to get intelligence is much more important than managing cash, because as we move more and more to wallets or central bank digital currencies, cash becomes a very trivial part of the overall equation. And so from a technology standpoint, what this means is that we're going to be in an environment, for those of you that are in the technology side of this, that's going to be around what we call the hybrid multi-cloud, which means that I'm going to be using cloud kinds of technologies. It was mentioned earlier this morning around microservices, that sort of thing. But I'm going to be using some of it in my data center. I'm going to be using some of it in different kinds of public clouds. And so I'm going to take advantage of whatever the resources are needed to be able to match the requirements of the services that I'm delivering to my customers. And that has huge implications about how do you be able to manage that. And so the next slide, please.
Next slide.
Okay, so one of the challenges around this is around the network, and how do you be able to handle the challenges around digitalization. So first of all, you're going to have an awful lot more devices that are communicated, whether it's smart endpoints. We have much more in the Internet of Things kind of communications. It's going to be very difficult to be able to find where the problem is, because now we have things not only on the data center, but spread across different public clouds and different kinds of environments, and maybe things like smart cars and that sort of thing. But at the end of the day, what we need to do is we need to assure the customer experience. So, because otherwise, they're going to leave you for another provider. And so the technologies where you can get across multiple vendors, multiple kinds of environments, multiple clouds, be able to visualize what's going on, to be able to actually, we talk about a 1-3-5, which is be able to find recognize a problem in a minute, be able to isolate where it is in 3 minutes, and in 5 minutes be able to have rectified or worked around the problem. All of this being done automatically. The benefits obviously are clear. You have lower expenses to be able to operate the system as well. The same is true around the data.
Could we take the question?
I'm sorry. I don't have time.
You don't have time?
I'm right on my end.
Oh my goodness, the thing is that I need the time. I need to borrow the time.
Sorry.
All right, guys. But anyways, thank you so much. Thank you so much for your. Thank you. Thank you very much. Yes. All right. I was Ron from Hawaii, a diamond partner, and now moving on to the next presenter. They are companies, they are the events digital lending partner. It's Branch International. May I request Mrs. Deo Ademola, the Managing Director for Branch International of their Nigerian operation, to join us up on stage to talk to us about access to lending, tech, and financial inclusion. So may I request Mrs. Deo to come on stage? Ma'am, I will have to provide you with a roaming microphone. And here is the slide changer. So that's next slide, that's the back slide. All right. If you want to complete that, you can pass the phone somewhere else. Oh, you can put it up over there, right? And we need this thing to be changed. Oh yeah, time.
Good afternoon, everyone. My name is Dario Odulate Ademola, again, Managing Director, Nigeria for Branch International. And very quickly, I'm just going to talk about access to lending, tech and financial inclusion. Before I start, I would just like to say that I'm more, I have worked formerly in financial inclusion, but I'm more a proponent of financial expansion, because you have a lot of people done some good work to get a lot of people in Nigeria with at least one formal financial product, right? But less than 3% of eligible adults have access to credit, which is where companies like Branch come in. So the power of digital transformation talks about technology reshaping the financial industry in many ways. Now, one of the things that we've been able to do in Nigeria and in lots of parts of Africa is the fact that we've been able to leapfrog technologies to be able to get financial services into the hands of as many people as possible. So with the cell phone, mobile phone revolution in Nigeria over the last 20 plus years, in Africa over the last 25 plus years, we've been able to maximize and easy access to financial services and integrate. This helps us break down barriers to lending. Now, again, technology deficits to be able to get financial services into people's hands. technology and infrastructure deficits actually, because the first way that other parts of the world got financial services into people's hands is getting as many branches in as many parts of the geography as you can. But when you have difficult to access parts of your country, you have infrastructure deficits, so banks have to power their own branches, they have to secure their own branches. That now becomes a very expensive endeavor. And with innovation, Fintech has been able to get these services to the hands of as many people as possible, right? So banking as a service, credit as a service, has demonstrably expanded the reach of financial services around the world. And using technological tools, we're able to democratize lending. Because one of the other issues that you have with profiling a user for lending when it's a face-to-face transaction is a lot of biases can come into play, and technology tends to help with that. So how do we do this? It's data and analytics. So at Branch, long before it was the sexy VC raising fund that it is today, we've been using artificial intelligence to be able to help us decide the creditworthiness of a user. Now, when you have people who have never accessed formal credit before, they have very limited banking histories, you have to basically be able to use alternative sources of data to be able to say, I think this person will be a good borrower. And the other thing that is good about machine learning and artificial intelligence is that it's a constant learning loop, right? So if the system decides today that Dial is a good borrower, and Dial was delinquent on a loan, the system then learns from that and says, with other people that went delinquent, what characteristics do Dial and this person have in common, and then they're able to profile and say, well, if in my data profiling, I see somebody that has this indicator, then it's likely that they will be a bad borrower. So it's a constant learning loop, and the longer you do it, the better you get at it. And Branch has been at this for 9 years across Africa, and since 2017 in Nigeria. But then, the more you are doing this, you then have to find alternative sources, more sources of data, right? So if the machine are taking a look at maybe your SMS history, right, and trying to figure out, have you gotten any delinquency messages from other borrowers or anything like that? You also have to be able to utilize other sources of data. So sources of data that had previously been shunned by financial technology firms like traditional credit bureaus, for example, are becoming more and more valuable in being good data sources. And as a fintech like us, you have to constantly be looking for data sources to tell you who your users are. And so the next thing is regulation. We can't be in this business without regulation. And I know a lot of providers have a somewhat contentious relationship with the regulator. But the way I look at it is they're here for the protection of both the providers and the users. And so we have to figure out a way to work together. And they have national objectives that they are trying to push. And providers like us have to have that good relationship to be able to get that done. So you also have to approach the relationship like you're a consumer yourself, and you also desire to be protected. That being said, it's imperative for regulations to evolve as the ecosystem evolves, and that's the work that continues. For those of you that were here during the panel earlier, you heard us talk about the fact that the way fintechs have been able to get to market very quickly is by partnering with other providers. Like you stand on the shoulders of giants, right? So the traditional way of doing banking in Nigeria would be you have to build your own payment system. You have to build your own infrastructure. But a fintech can come in and basically utilize other players that have built those infrastructure already. So partnership is a big reason why we're quick to market, and in many cases successful. Partnerships also help you seek underbanked users, because, for example, if you partner with an agent banking network, these agents are in places that you will never be able to get to, but by utilizing them, they're able to get your services into as many users' hands as possible. And collaboration is, it's a big watchword for us. Right. So, what does this say? Future outlook. Where does all of this get us? As the world evolves, new technologies, better technologies come up. We have the potential to continue to transform lives. A lot of the time when we go out and speak to our users, we learn that we are the first company that's ever given them formal credit before, without asking for all kinds of documentation that they're not able to provide. And by using this revolving line of credit effectively, you're able to run your business, you're able to provide for your family and things like that. So we've been able to transform lives already, and with new technologies, utilizing new technologies, getting better at what it is that we do, we will be able to help more people. And innovation is our watchword, creativity is our watchword. We have to constantly find new ways to expand the business and to expand our user reach, and basically give as much value to the economies we operate in as possible. Thank you very much.
Thank you. Thank you. Can we take, okay, can I have the microphone? Oh, yes, I have the microphone on that wall. Pretty good. So if you could kindly cover half of the way so that we can accommodate and do more questions. Microphone, yes.
Thank you very much, Daniel. My name is Mukai. I work with Fintech. So one of the issues with lending is collections, right? And you spoke earlier.
Sorry, one of the issues is what?
With lending, with the success of lending in this country anyway, is collections.
Yes.
Nigerians are, in a way, not, they don't have the payback, mentality. You did mention earlier that you usually engage collections agencies and you try to ensure that they don't, abuse the customers. My question here is it not possible to have some of your own data public? Because you create algorithms, machine learning, where you analyze the credit history of clients. We have credit bureaus, but we know that not all organizations respect that. Is it not possible as fintechs, and we have a lot of them here, I believe, is it not possible to make some of our data public? That way, we can create our own credit bureau, where we are able to check the data of some of the clients that come to us. Wouldn't it help push the extent at which credit permits today?
To answer your last question first, absolutely it would help. But I do know that there's a lot of work being done. There's organizations like, for example, the Fintech CEOs Forum, of which I'm a member. There's NIPS as well, putting together, because this has to be centralized, right? This has to be something that we're all reporting into. The data is verified, and so you can rely on calling. So when Lagbaja with BVN 123 says that they want to borrow from you, you check the database to see what that person's history is with other lenders like yourself, and you need that data to be correct. So there is a lot of work currently happening. I do think that by the end of 2024, we will have something like that up and running.
We got any more questions? Okay, there's one over there. Thank you very much, sir, for understanding the importance of making it halfway.
Thank you. That was a good one. And just to take it from what the last person that asked question said, right? I mean, we know surely that the challenge with lending in this part of the world is collection. I mean, for as low as 5,000 naira, some people will take a loan from one, lender, right? And you abandon the phone number and the other number that they use, right? So what has been my own experience, right? I know you've been in the industry, you've been lending, and you seem to still remain standing and very strong. So what has been your success story, and what has been the reason? I mean, what exactly is what do you share with us? And be your success story to continue to be the industry as it remains strong. But we know a lot of lenders who have come and maybe know that because they are hand-on or they don't have a good collection process and all that. Now, apart from the algorithm and everything we know, you also rely on collection. I mean, have you had any reason to go after people, using the enforcement, the girls that use the other elements of collection beyond the system you have, right?
So
Thank you.
we under no circumstances sort of like go after people. What we do is, if it goes beyond a certain period of delinquency, as you mentioned, we outsource the collections to agencies. And those agencies will continue to contact those users until some sort of payment is made. And those agencies are incentivized to do that because their payment comes from a commission on how much they're able to recover. But while doing that, and while being firm in your collections practices, it is extremely important that you don't get abusive. Unfortunately, the reason why abusive behavior permeates our industry is because it works, right? When you're embarrassing users and contacting, you've gotten access to their phone logs, and you're able to contact, relatives and friends to shame people into repaying. In the short term, it actually does work. But what we have found is, again, and the reason why we've been in the industry so long is that in the long term, it actually hurts you, right? So our experience has been with treating our users respectfully, even if we are firm, in the long term, it helps us. So to answer your question in the short term, like what has our experience been like and why are we still here? That's actually, I think, at the base level of it.
Any more questions? We have time. Any more questions? Mr. Dale, we still have about time. Yeah, Diane, sorry about that. We still have 5 minutes more. Could you add some spice to your closing remarks for your keynote? If you could add a few more add-ons. Some words of wisdom that you would like to pass on. Because collections is definitely an area of concern, and I would resonate with, because in the part of the world which I come from, a lot of abuse and all that's normal. We actually even get threatening calls that okay, we're the cops, etc., etc. Yeah. So some words of advice, some words of wisdom from your side.
I think treating your users fairly or your customers fairly, treating your users well, I think is one of the main ways to make sure you are around. If we gather here 10 years from now, especially for fintechs, you're still in business. I think there is a lot of short-term gains to be made in, what some would call sharp practices. But for the long term, it will hurt your business. So in my experience, both at Branch and in other places that I've worked, is treating your customers and your users fairly and treating them the way you would want to be treated, I think goes a really, really long way in building customer loyalty, in building user loyalty, and in building brand longevity.
Michael has a question.
Okay, it's similar to, I think I asked the wrong person the last time. Talking about lending is not easy in Nigeria. You go through a lot of, things for people to pay. People collect money and japa. And, the difficulties for you to collect money. Sometimes I remember those days, people give checks to people. They find it difficult to pay back. Deliberately do not want to pay back.
And these days, I find out that I have somebody in my church, even a pastor. And all of a sudden, I saw mail from somebody trying to destroy the image of that pastor, that he was not able to pay the loan he collected. I should beware of this person. I was shocked. What do you think about that practice? Is it moral? Is it legal? Is there any other procedure for you to be able to address this than trying to mess up that person's image? Thank you.
So I'm thankful for the opportunity to drive home this message because I've said it a few times today. Absolutely not moral, not right, illegal in many cases. So yeah, and it's something that's been going on since the beginning of the microfinance industry globally. You'll find in some markets, there's stories about shaming of borrowers who are unable to repay, leading to suicides. That was a big thing in South Asia, Southeast Asia, where microfinance as we know it today actually started about 3 decades ago. So shaming of borrowers who are unable to pay isn't new. And it wasn't created by fintechs, right? The difference now is the fact that you're able to shame somebody because you can reach them through text messages or WhatsApp messages. You can spread it much wider versus a bank agent shaming you in your village by telling people around you. That's the only difference. So it's been going on for decades at this point. I mean, I think shaming borrowers with what they call it, debtors jails, 300 years ago. So it's as old as banking in and of itself, right? So it's nothing new. But no, it isn't right. And we have found that by choosing to not engage in those kinds of practices has overall been better for our business. So that's the best thing I can say. It may be working for some people, and if they're able to sleep at night, kudos to them. But no, it's not.
Man, we have a fan club over here. There's someone who wants to talk to you over there. There's someone over here. There's someone over there. There's someone over there. Why don't you take the call during lunch? Thank you so much. Thank you so much, Daniel. It was wonderful having you. Thank you for your valuable insights on the CEO panel and also during this keynote. Thank you so much, man. Thank you very much. We will take a break right now, but I would request all of you to reconvene at exactly 1:55 p.m. local time. Lunch, I've been told that lunch is held at the Signature Restaurant. However, I will request you to please visit the registration counter outside in the lobby area, which is outside where you are registered for the event, so that you can fetch your lunch vouchers. We'll see you in the next 55 minutes. Thank you. Guys, I need this thing to work because I asked your alright. Anyway, the other guy got Israel or America, whatever his name is. I asked him to, he's got Israel and right from Israel. So, like, I wanted this thing to be taken. This I don't take it. Yeah, say this is like that's step on that. Okay, don't
You guys go have lunch.
Yeah, see, this is something that we're doing. That's why I really, I want roll up. Why is this roll up which I with why is he roll up? It sounds sensible to me. Can you count how many people are on the payment panel? I need you to have a good work lunch. 1:45. So, right now, you will right? Texas, you will find you come to carry and you stop. The same, so you also check with the ICPS, okay? Are you going to leave these?